Oh, good afternoon, everybody. That was unexpected. I normally have my countdown, but let me explain. When I'm filming, I use this for filming the videos as well. So I have to remove the countdown for the videos. And I forgot to put it back on. So I was just like, I hit the button thinking I had a minute just to, to chill, have a drink of coffee, all of that fun stuff. But no, it was live immediately. So, hey, welcome. Welcome to the show. Welcome to the market close. What a day. What a day. We finally got the rest of the bank earnings. So we're going to talk a little bit about the banks, of course. Do we see more dividends rising? Yep, we sure do. So all the banks, and the big news though, the big news, guys, is EQ Bank. Oh, the move they made. We heard about it just yesterday. One of you guys in the chat mentioned what was going on with EQ Bank, and it's a big deal. It is a big deal. In fact, EQ Bank, they're up quite a bit today, quite a bit. If you haven't seen it, we'll look at it here in a little bit. But oh boy. Now, before I get into the charts, I want to very quickly, holy banana bread, Wahipple came in here almost an hour before the stream started and dropped a gifted membership. So it's kind of like goat power from the beginning. There we go. Thank you, Wahipple. And I believe it was Amanda. I think Amanda won the membership. So congratulations, Amanda. This is fantastic. This is fantastic. All right. Well, you know what? There's no time like the present to jump into the charts. Let's pull on up the TSX. So as you can see, another green day on the market, and we're now above the blue line. So the market up about 1% today, up about 1%, and I think we're going to see some exciting things when we go to the heat map. So let's just hold ourselves for that. Now, south of the border, not as nice. We are down slightly on the S&P 500. They're down about 0.12% underneath the blue line. So the Nasdaq's above the blue line, but they're also down a little bit, 0.31%. The Dow Jones Industrial also down 0.23%. So, or actually, sorry, the Nasdaq was down 0.31%, 0.23% down for the Dow Jones. The only bright spot in the U.S. are the little caps. They're doing okay. They're actually doing okay, and 0.72 up. So, got to give them that. Gold today is up a little bit, while not the same story for silver. Silver is down about 2.5%. Copper also slightly to the downside. They were green most of the day, but as you can see, in this last hour, we got a little bit of a red candle coming to the downside. Oil having a pretty good day. Oil is up 1.19, and of course, crypto is crypto's red today. So we definitely have a little bit of that going on as well. All right, let's get to the heat map. And this might be the part I'm excited for. I don't even know if we're going to be able to see it on here. For the most part, the banks all looking pretty good for the most part. You got TD up a full 2%. You got Royal Bank up 2.56%. CIBC up a good 4.1%. National Bank up 2.35%. So we're seeing some good stuff on the banks today. And guys, before we go any further, let's pull up the check card. Let's pull up our check card. Here we go. Oh boy. We got everybody else coming in. Everybody exceeded expectations on EPS and revenue. So they've all beat, all expectations are beat. This is what I was expecting. This is absolutely what I was expecting. And that's one of the reasons with 60 coming out this week. I actually did a swing trade on it. My goal, I wasn't planning to make a lot, but I just wanted to ride through this, and I figured I'd make at least a little bit of something. So I made about $300 and something dollars on that swing trade. So I'm happy with it. But look at the dividends. Two companies. So we already know Royal Bank was pulling out the big bucks for everybody with 10 cents. Well, CIBC was like, nope, hold my beer. We're going to do the same thing. And that's what they did at 10 cents. And we got National Bank with 6, BMO with 4, TD with 3, and well, nothing from Scotiabank. But Scotiabank's the one we knew wasn't going to be doing it anyway. So overall, I think the bank season went pretty good. And well, I want to show you one thing right now, and we're going to go take a quick look at EQB. So this is EQ Bank. As you can see, before we even look at the chart, I'll tell you right now, they're up 13.08% today. Yeah, 13. That's amazing. But look at this. This is a big jump. I'll pull up the 1 year so you can sort of see. So I mean, they're not back to where they were, but this is a huge pump today, and this is all on the news because Loblaws is selling PC Financial. They're selling PC Financial to EQ Bank. And this is big. One of the reasons it's big is that PC Financial, basically, they're also a virtual bank without fees. They're pretty much, well, they're almost in a way, it's like one of the main competitors for EQ Bank. And now EQ Bank is gonna own them. And in addition to that, they're also getting the PC Optimum contract from Loblaws. So they're going to have a pretty good deal with Loblaws going as well. This is very good for EQ Bank. And as we can see, they jumped big time, more than $10, today. So I would have, this is a jump I missed. I was not holding them. I wish I was. I wish I was. That would have been a great swing, honestly. But this is great news. This is great news for them. All right. Now we're gonna jump on back to, this time we're gonna go to the heat map for the United States. So we have NVIDIA having a pretty good day, up 1.85. Meta also 3.38. Amazon's down. Amazon's down about 1.58. Eli Lilly's down. MasterCard's down. So there's a lot of red in here for sure, but we do have at least a few companies are doing okay. Broadcom, they looked, I'll tell you guys, at the beginning of the day, I was looking at Broadcom and I was like, I think there's a chance they could make a move to the upside today. So I did do a swing trade on Broadcom, and no, they did not. I bailed with a tiny bit of profit, not a lot, but because once I realized I was wrong, I wasn't getting the movement I wanted. I'm like, okay, well, we'll just wait for an exit point, and I got my exit point a little bit later in the day. So what can I say? All right, and looking at crypto, we'll pull up the old crypto board here. Pretty much red right across the board. Bitcoin, Ethereum. Look at XRP down 4.10%. Here's a one little green thing in here. Eighth Weth. I don't even know what that is. Eighth Weth. That could be our weird coin of the day. But I'm looking at it closely. I see AAVE. Ave. Okay. All right. Now I know what that is. All right. I like to. It's kind of tradition around here to pick on some poor little altcoin. I like to, if the market's red, I like to pick on a green one. Some random one, I don't know. There's a green one. There's a, here's one. Let's go with this one. What, the banana bread? AIXCB by Virtuals? Okay. I've got absolutely no idea what this coin's about. Only thing I can guess is looking at their little head thing here, their little icon. Maybe it's a game. I don't know. It could be anything. But it's not worth very much. Believe it or not, it's up, but it's been mostly on a downward trajectory for a long time. This thing isn't even worth a penny. It's worth basically 0.07 of a penny. So these are risky coins. I call them crap coins because it's like going to the casino. You throw the dice, you're playing craps, you crap your pants because you lose. That's why they're crap coins. If you want to make money in crypto, you can do it. just stick to your Bitcoins. Your Bitcoins are a lot safer, and those are the ones they're going to bounce back. Bitcoin's coming back. So what can I say? What can I say? This was today's pick was more unusual than yesterday. Yesterday we actually picked something called loser coin. Believe it or not, true story. But we did. All right. It is time. It is time to hit the chat. And all right, let's see. Well, Hipple, I don't like doing that with my phone, so my lunch break it is. I don't know if I make the show, but hopefully. All right, well, hopefully you show up. If not, there's always the replay. There's always the replay. Larry in the house pretty early here. A wonderful day. Sold my DJCO 386 to 394. That's not a bad swing to some person. Now it's 434, soon to be 400 again, on the way back down. That's the life of a trader. It's going up and down, and that's kind of what you want. It absolutely is. Relaxing Rains says, slept all day, excited to see 60 up past 26. Yes, 60 had a pretty good day. Had a pretty good day for sure. I do like that. I do like that. Elaine says, hi, this was a good day. Awesome. Did you get any good greens, any good movement in your portfolio? Was that what we're talking about? Stangray. There we go. Hello all. Paul's in with a good afternoon. Brian's in the house. 9 watching, 10 likes. That's a better number. Oh, I like that. If the likes are more than the number of people watching, then it's like we're breaking the rules of physics. So I can do that. Boda says, I had a feeling about MDA yesterday. Yeah, and we talked a bit about MDA. Like I said, I have a lot of confidence in MDA, especially on the long term. But the fact that you just said that makes me think something happened to MDA. I have not looked at them yet today. Let's look at them together. I'm just paying attention to the clock here. I don't want to miss the bell. I'm good at missing the bell, that's for sure. MDA, let's go over here and we will pull up MDA space. Here we go. Holy banana bread. I said I had a good feeling. I don't think it was that good, but look at this. Nice. That's a big pump. That is a very big pump. Huh. Interesting. Now I'm wondering, what happened? Something happened. Something definitely happened. I don't know what it is, but something happened to MDA. Let's see if we can find out. That's one of the things I like over here. Well, let's go over here. We'll just do MDA. Here we go. MDA space. Here they are. We're going to add MDA. And let's pull up their big jump. So I'm not seeing earnings, but I am seeing news. Let's see. Fiscal year outlook upgrade. Okay. Liftoff on Canadian government. Oh, they got a contract. They got a Canadian government contract. So there we go. That's what we were talking about yesterday. I was talking about if they were, if they could get some of this infrastructure, especially the Arctic stuff. Well, no sooner did I talk about it, did it happen. That's amazing. Quite literally, that's like what looks like that happened earlier today. But yeah, good on MDA. I like it. Roku is in the house. Hello, Roku. And Wahipple, hey, work busy, gotta go. All right, well, like I said, the replay will always be there for you. Rory is here again. I'm surprised CIBC went to 10 cents. I hold it, so it's okay. Absolutely. Mary is in the house with a hello. Hello there, Mary. Hello. Mary is our official captain of the like button, guys. So if you haven't hit it yet, I know you guys got off to a good start. If you haven't, if you guys have slacked off a little bit in the, as the next batch of folks came in, just be sure to hit that right now, because I'm going to have a wonderful sip of coffee here. It's a very good sip of coffee, to be honest. Okay, Lord Fubar, I missed you yesterday, Candace. Well, we missed you as well, Lord. We missed you as well. All right, An says, Hi, Candace, you are right. Not our right. Buy on rumors, sell on facts. Buy EQB now has some risks. Yes, there is potential, but personally, I could move in very cautiously. I would move in very cautiously. Yeah, I would say that. This is good. Overall, this move is good for EQ Bank. So we're talking about them purchasing or acquiring PC Financial. It will make them into a stronger bank. But there's always a but, isn't there? The but in this is that I believe they're paying 1.15 book value. So, there's going to be some extra debt that's going to get added into this scenario as well. So they're going to take on debt, obviously, to make this purchase. So that could be the other side of the coin. Once they get that debt paid down, once they move forward, I think they'll be fine. But good move long term for sure. Could there be some pain short term? Yeah, there could be. There could be. Despite the fact that we got this giant pump today, but that is the news. People bought the news and are excited about it, and I think they have a right to be excited. But it will probably come back a little bit. It will. Claude says hello. Kind of bummed you didn't pick Winner Coin. I know. If I had picked Winner Coin, there's no way. Everybody would have been like, you pre-picked the coins, don't you? Because that's what I would have done. I would have had a Winner Coin for the next day. Actually, the funniest is we did have a couple of days, like 2 days, where I picked the same coin completely by random. And when you look at how many there, I mean, the odds of me picking the same coin, because they're not always in the exact same spot. They move around a little bit down there, and some of them just don't show up, and some of them do, because, like I said, there's about 10,000. There's about 15. There's probably about 15,000. So yeah, it's hard for that to happen. Such a catchy name. My portfolio is pretty flat today, says Dorpat. Oh boy. Well, yeah, I guess it depends on what you're holding. Lord Fubar, you should try day trading AMPX. I sell covered calls on that, and I have leaps. Interesting. AMPX. I'm just going to take a gander at that because it's not ringing a bell right off the top. AMPX, here we go. All right, so Amprius Technologies. Okay. Oh, and it's on the U.S. That's why. I actually don't do any swing trading directly on the U.S. market, which is funny because most of my swing trades are on the U.S. market. How? It's because of CDRs. I use CDRs a lot when I'm doing my swing trading to avoid all of the currency thing, because I don't want any kind of a currency change or any kind of a currency flare up while I'm in the middle of a trade to completely either tank a good trade or, well, I'm most worried about it tanking a good trade. So if I was going to do a company like this, AMPX, I would be holding a U.S. account and trading in that. That way it once again removes the currency exchange thing. Like, it removes a whole factor off the table. All right. Tom is in the house with a hi all. Amrit, I know I've been asking about EQ Bank. I wonder how their new acquisition of PC Financial is going to affect things. Overall, I think it's a good move for them. I mean, they effectively have more than doubled their customer base. So that's not a bad thing at all. It'll be interesting to see how they handle it. Hopefully, and here's that thing. PC Financial has a bigger name than EQ Bank. So that's one of those things that you probably don't want to mess with. And I'm going to assume they're going to keep the name. Because it would be silly not to. It's got brand recognition, a lot of brand recognition for sure. I mean, how many of you guys here have used PC Financial at least once in your life? That was one of the first banks I moved to as soon as I learned that there weren't any fees. So I do like PC Financial. Amrit says, debating if I should hold or still wait until I'm positive and sell. Oh my God, I missed the bell. It's 4:03. All right. We get a weak bell. Oh, I can't believe I 5 minutes to the bell and I'm like, I'm ready. I'm not missing it. I got it dead on yesterday. But today, I know now that when I get caught up in the chat, I'm going to see a whole bunch of people saying bell, bell, charge, shock. Actually, one of my favorite lurkers messaged me the other day and said, "You know what you should do? Every time you miss the bell, you should have to give you have to or no, every time you forget to show the screen that you're looking at, you should have to give a gifted membership, and then every time you miss the bell, you should have to give two." And I was just like, my reply to them is that I'd be in the broke house really fast. I would totally be in the broke house really, really fast. Michelle says, good afternoon, all. Lord Fubar, I remember doing MDA and ISD in the... I think that's a different type of MDA. I think it is. The good old days. Oh, boy. Don't chase EQB. Good vibes is in with a bonjour. The bell must be rung. Yeah. Don't need to set the alarm. Oh, you guys are always right. You guys are always right. Amrit says, curious if anyone knows if you can buy the physical gold from Wealthsimple and hold it in the TFSA, or if it's out of the TFSA and you have to pay taxes on it. Would be awesome if we can hold in the TFSA if you got room. You can hold it in the TFSA. Yeah. So yeah, they're commodities. You can hold them in the TFSA, avoid the taxes. You're fine there. Absolutely. I know. Tesla closed at 454.58, up 1.75. Yes, I actually looked at Tesla today when I was looking for my trades. I went and looked at Tesla, and I'm like, they're in the higher part of their typical swings, so I couldn't get in on Tesla today. But amazingly, if I had, I probably would have made a little bit more than I made with Broadcom. So who knows, right? A poll on how many minutes late on the bell. Rory says 3:02, I wager. So yeah, that's about right. Rory's about dead on. I was about 3 minutes and maybe 2 seconds late. Oh boy, haha, on Tesla, she said it's not ringing a bell. I know. Oh gosh, come on, 3:02. Netflix and Air Canada pulled it down today. Both Netflix and Air Canada came back a little bit. Air Canada is still well above 19, so we'll have to see what's going to happen there. 351, 303. Here we go. This is where it happened. Bell. It's 4:03 in Ottawa. I know. You lose, Candace. I do lose. I don't know what to say. I don't know what to say about that bell. It's just sometimes it gets a little out of hand. Sometimes it just wants to. Maybe we can say Ottawa. Ottawa can be like Newfoundland. We'll just get an extra. We'll get our own little time zone. It's like 3 minutes off of everybody else's time. It's because of the concentration of politicians. I don't know. It's a thought. It's a thought. So that's something that we can keep in mind. Oh boy. Yeah, that's a good one. What can I say? Now speaking of gold and speaking of Wealthsimple, I'm going to drop the link in here. Any of you who have not yet tried out Wealthsimple, here we go. I'm dropping a little link here for you. This is the affiliate link for Wealthsimple. So when you sign up, you get $25. They throw $25 at the channel. That's always fun. But here's the best part. Right now, and I think there's only 2 days left on this, they have, when you sign up, you get your name put into a draw for some actual gold. It's part of a gold promotion because of where they started letting you buy gold, which you can hold in your TFSA over there. So there's 2 days left on it. If you want to give Wealthsimple a try, now's the time because you got that chance. I can tell you this right now. I'm not going to win because I'm very unlucky at draws, but you guys could have a chance. You guys could have a chance. Just jump on that. Just jump on that referral code. Get on over there, hook it up. I like Wealthsimple. They are, they're really good. And one of the best things I like about them is that they're always improving. Like a lot of times, like I look at even 3 years ago, I look at the Wealthsimple from 3 years ago, compare them to today, and it's almost night and day. So anyway, just dropping that there for you guys, and giving you that 2-day notice. So if you want to get in on that contest, what can I say? All right, holy cow. Let me see here. Brian says, I think they do the draw for the house tomorrow. Oh, is that their mortgage thing? Is that the thing that I think that was for their mortgages? Yeah, because they had a deal where if you moved your mortgage to Wealthsimple, I think they were going to give away a house. I think that's how it goes. Brian, correct me if I'm wrong on that. I didn't really look that much at that one. The gold caught my attention though. That one definitely caught my attention because it's gold. I love gold. And being able to put gold in your TFSA, to me, that's kind of cool too. Now you can still, if you look at something like London Gold, that's a good way to get, you're buying a company that mines gold, but it is a way to also to get in. And apparently, okay, Brian's saying fill in a survey and get entries. Yeah. And that's a thing too with Wealthsimple too. So let's say you signed up today, you get your 25 and the channel gets 25. You bring over a bunch of money. I think you get entries for every bit of money that you bring into the account, which is pretty cool. Too late to enter now. Well, that's for the house one. I'm talking about the gold one. Yeah, so that's kind of cool. I'd love to hear. Nothing would make me happier than if it was one of you guys that won the gold, and you could come back and tell us in chat. I think that would be really, really cool. What can I say? Doorpat says Questrade will blow them out. They are launching gold sales and ability to custom make your own ETFs. No fees. Canadian in a t-shirt. I just posted a video on all the new updates for 2026. I saw the video. I didn't watch the video. I saw the thumbnail. I didn't have the time. Today was an editing day because I had to get that video up for the 0 to 100K challenge. That's dropping tomorrow, though if you're a channel member, you can watch that today. So that's always kind of cool. But the concept of making your own ETF, it's a good one. But I imagine, and I'm going to say this, I imagine there's going to be a lot of limitations on it. So for example, I don't think you can make your own covered call ETF. So if you're an income investor, that may not be that good. But I think if you're a dividend growth investor, you'll probably be able to make some really good, interesting ones. Get that mix that you want. Because look at it this way. If you look at an ETF and you're like, you know what, I've already got a lot of tech. I want some S&P exposure, but without the tech companies. There you go. You could build that. And here's the thing. So yes, Questrade has announced it, but don't think Wealthsimple isn't watching. I imagine they are, and they probably already knew about it before it was coming out. And I imagine, I can't confirm because I don't know, I don't have insider knowledge on this, but I will bet you that within a year we'll have a similar product from Wealthsimple, if not sooner, probably sooner than a year, because they'll do it. They'll absolutely do it. I think this is a great idea, and then it'll be interesting to see now if these really take off. Imagine if the management companies, some of the management companies start, well, I don't know if they could though, because they would still have to do it through a broker. I was trying to think if there was any way, like, you go to Hamilton and sort of cherry pick your favorite funds and create your own fund with it. That would be fantastic. But, the technology is always advancing. So down the road, that could be a thing. So, here's the thing. All right, let me ask you guys this question. You don't have to answer if you don't want to, but if you want to, it'd be kind of cool. If you could create a 3-company ETF, and we're going to talk, let's talk dividend growth. We'll go dividend growth for a moment. If you wanted to build a 3-company dividend growth Canadian ETF, we'll go Canadian, What 3 companies would you choose? Just kind of curious. I'm thinking about this too, because it's not fair for me to ask you guys and not answer it myself. Obviously, I think I want a bank, and I think I want probably a bank, an energy company, and a gold company. I think at this point right now, if I had to put 3 companies into a custom ETF, I would probably go, let's say, you know what? Let's go CIBC, Torlamine, and London Gold. Let's put those 3 together into a custom-made ETF. So that's just what I'm kind of thinking. You guys probably have completely different ideas, and it's kind of neat. It's kind of neat. Crispy Bone says that makes the make your own ETFs is crazy. It's kind of good though. Yeah, so there we go. Yeah, it's kind of good. It's like I'm reading ahead and just saying your words. Mario's in the house with a good afternoon, everyone. Amrit says, I'm curious to see the comparison between Wealthsimple and Questrade on who's better to purchase gold from. That'll be interesting. Yeah, I mean, and this is the thing. Well, right now, Wealthsimple has the gold. Questrade is getting the gold. So we'll have to sort of see. Yeah, I look at it this way, though. I mean, how you can't change it up that much, right? Because obviously, both of them are going to be tied very much to the price of gold. So I think they'll be very similar, but we'll have to see how. At least with Wealthsimple, and I can confirm you can hold that gold in your TFSA, which is fantastic. It's better than if you're holding physical gold, you're going to pay capital gains on it when you sell it. Simple as that. You're not going to, unless you go down to Roy's We Buy Gold on the corner and sell it there. But then you're kind of taking a loss anyway if you go to one of those places. Rory says, don't we all have our own managed ETFs already in a sense? Well, yeah, that's your portfolio. That is your portfolio. You're right in that sense. I mean, if you really think about it, your portfolio is, well, it's like a giant ETF. You're creating an individual basket. Now, and that's the kind of the thing, if you think about it, with what Questrade is doing, it's kind of like just creating mini ones in your system. But what is nice about it, and this is kind of the interesting thing, I was going to say, you don't have to buy whole shares. You could be doing sort of fractional, but you can kind of already do that at the moment anyway. So kind of interesting. I don't know. I still think it's a good idea. And it'll be really interesting to see how it works out. But yeah, Rory, that's a really good point. Rich with Rich, how do you make your own ETF? Does the ETF become available to trade to the public? That's an interesting thing. That I bet initially the answer will probably be no. Probably. I'm not sure. But imagine if you could make an ETF, give it its own name, and share that name with friends, and they could do. The problem is, and here's the problem. Here's why I'm going to say this probably won't happen. Because you're not financial advisors. So because you're not a financial advisor, I imagine the regulations will be pretty strict about sharing. So I think they'll all be personal. I don't think you'll be allowed to share them. I mean, you can call up Joe Blow down the street and say, yeah, I invested in this, I made this ETF with this, with this in it. Now, keep in mind, you could tell him the 3 stocks that are in it, and who's going to say that he's going to put, maybe he goes with equal weighting. Maybe you're heavily weighted towards gold, or maybe you're heavy weighted towards banks. Or maybe, maybe you made a Canadian tech ETF. It's hard to say. Claude says, kind of torn with my strategy. Too conservative, 50% of my covered calls in these 4. So HYLD, USCL, HDIV, and QQCL. And the other 50% with the 14 biggest payers. So HHIS, Big E, Bank, HBTE. Okay. So, you've got, I mean, it's not that bad. I don't think it's that bad of a strategy. I'm just taking a look here. It really depends on, excuse me, I need a little bit of coffee there. I got a frog starting to form. I could tell it was getting kind of riveting. Um, oh boy. I don't think there's anything wrong with what I'm seeing there. I like it. I like both sides of your portfolio, Claude. But it really will boil down to what your goal is. I mean, if your goal is maximum income, if you're 100% income and you're down with it, there might be some adjustments. But I gotta tell you, you're getting good income from both sides of that equation. So I don't know. I wouldn't say that it's that conservative. Let's see. Paul says some of the life insurance companies did over 100%. Banks nowhere near. I guess that's why Evolve Bank did well at 60% total return 1 year. Yeah, there's been you take Manulife Financial. Manulife Financial has been absolutely, well, here, let's take a look. I still have it up. MFC, here we go. Whoops, it helps if I actually type in the whole thing. MFC, there we go. Manulife Financial. And I'm going to I'll just pull up their 3-year. This tells you a story here. So in the last 3 years, they've gone from $24 to $49. So that's more than doubled in price. And they are insurance. Sure, they are. But one of the big things that has helped Manulife Financial is they're I think they're the only Canadian insurance company that has access to the Chinese market. So that was kind of a big thing for them. But yeah, Manulife Financial, they're a fantastic company. Fantastic company. And that is, and Bank holds them. Bank holds them, holds Sun Life, holds Great West. Also, Power Corporation of Canada, Bank holds that as well. Let's see. Hey, Candace, hope you're having a super week. Great information as always. Cheer from Georgian Bay, tiny Ontario to be exact. Yes, and if I remember correctly, that's that tiny bay on the very bottom of the Hudson Bay. So you got the Hudson Bay, and then there's a little bay at the bottom, and I believe that is the Georgian Bay. I believe it is. Correct me if I'm wrong, because, I'm just pulling this out of memory. I'm pulling it out of memory somewhere. Brian, I have to see the fee structure for an ETF, trying to wrap my head around how it would work. It's worth looking at for sure. Whatever the fee structure is on these make-it-yourself ETFs, they need to be low. Because, well, you're doing all the work. You're doing the manager, the fund manager job. So I would say you would want fees small enough that you wouldn't care about them. If they come out with, if they let you do this, but then they charge you a big fee, obviously it's the broker that's taken that. Then it wouldn't be worth it. Then just hold them. Hold them in your regular portfolio, and you're fine as well. So yeah, don't accept a big fee on these on this service. All right, Balik is in the house with a hey all, and Lord Fubar, you need some juice with those cover call ETFs. Put single stock ETFs in there. Yeah. Well, that's the thing. It'd be nice if you could put ETFs within these as well, but I imagine it'll start with stocks, and then that would be something that would come later. Maybe. I could be completely wrong. So let's see here. Paul said Questrade said no fee for self ETFs. I am guessing this would be like a folder with stock ETFs inside it, just selecting the percentage for each. Okay, perfect. That's what I would expect. That's exactly what I would say. No fee is just, no fee is the best type of low fee, if you think about it. Lord Fubar. Let's see. I have PLTE, TSLY, MSTE, and I hate Bitcoin, but at over a 90% dividend, I couldn't help myself. Okay, fair enough. Now, keep in mind, the Palantir one is not, really doesn't, as far as I know, I don't think Palantir has like a lot of, I don't know if they have any Bitcoin on their balance sheet. I mean, that's pure defense. All right. Kelly. I don't want to build my own ETFs. I am too new and have enough trouble choosing professional curated ones. Fair enough. Yeah, I mean, this is a product that I think I don't think it'll be right for everyone. I mean, I think some people will like it or some people will play with it, but yeah, no, I can understand that. I can understand that for sure. But maybe down the road, when you are more comfortable, maybe it'll be something you like. Maybe it won't. But either way, it doesn't matter because you can still you can still do whatever you want within your portfolio, which is kind of nice. Claude, I have CCOE and TSLY in individual covered calls. Nice. All right. Doorpat. But now we have to decide which stocks to buy every month. With my custom ETF, I will just have an automatic buy every month and it assigns ratios based on how I have designed the weight. Yeah, absolutely. That is kind of an interesting thing. But here's the thing: how will these funds respond to, if you have one sector or one company in there that goes like, let's say, for example, if you did this at the beginning of this year and you had put London Gold in there, well, it's up big time. That would put your gold balance probably out of commission. Now, will it do? And here's a couple ways. One, it can either sell for you to bring to bring it down to the proper weighting, or it can just not buy any more London Gold while it lets the others sort of build up. So that's kind of an interesting thing in how it's going to work. Like, I would really love to see the mechanics of it. And to me, that's one thing that I don't like, that I don't think I'm going to like about it, is that when I'm at least holding them regularly in my portfolio, I can kind of control that rebalancing really well. So, if I do get that one stock that explodes and I want to peel some profits off, I can then take that profit and I can put it exactly in the place where it's going to do the best. But with this type of an ETF, it'll be interesting to see how much control you have over it, or if it tries to automate everything. So, like I said, I need to see how it works. I really do. Paul, let's see. You could take your favorite AI ETF and only keep the top 20 or 30 stocks. Okay. Yeah, that's kind of cool. But at the same time, um, you know, one of the things too is that, so here's another thing against. Now, I'm not trying to be a party pooper. I really am not trying to be a party pooper, but here's this thing. If you have, you know, so in this case here, where you're talking about your favorite AI stocks or your favorite AI ETF, right? If you take those top 20 or 30 of them in there, you are now responsible, though, to manage those, to determine if there's anything wrong. So you kind of need to watch those stocks. Whereas if it's just the regular ETF that you are paying a fee for, of course, that management team, they're doing all of that for you. They're keeping their eyes open. They're the ones that are saying, uh-oh, this one's become a stinker. Let's pull it out of the fund. Let's replace it with this one, this up-and-coming superstar. So that is something that you would have to kind of manually do. All right. Paul likes your portfolio, Claude. Rory, our ETF stocks are like a frog in a blender. Yeah, maybe. Marley says, hi everyone, I upgraded Trading View from free to the next level. Missed the Black Friday, but it is interesting to have more indicators. Okay. Oh, gosh. I wish you hadn't missed the Black Friday, though, because that was a really good deal. Let's see. Anchor Tor says, I'm fairly concentrated in the Canadian energy and financial sectors. The last few days have been good. Yes, absolutely. Let's see here. If you buy gold with Wealthsimple, can you get the physical gold from them, and are you able to sell it at the banks? I wonder what fees besides shipping is on ordering the gold. That part I don't know. I know you can hold it. I know you can hold it in your TFSA. I don't know, and maybe somebody here does. I don't know, but is there a way? Can you actually get that physical gold from Wealthsimple? Maybe. I don't know. That's why I'm throwing it out to the audience, because I do not know. A red water. I've never seen that on 52-week highs. Henry Hudson discovered Georgian Bay. So I'm right. It is the one on the Hudson Bay. I like it. I like it when I'm right. let's see. Akadaz says you are thinking about James Bay, and it's not really small. Georgian Bay is part of Lake Huron, a big part. Oh, all right. Then I'm wrong. All right. That's exactly right. Thank you, Akdaz. Now that you said James Bay, the old atlases are starting to pop back into the head. Yep, yep. James Bay and the Georgian Bay is on Lake. Yeah, yeah. All right. And I just celebrated for being right when I was wrong. Oh well. I guess is that like a double wrong because I thought I was right when I was wrong and then I was wrong. Anyway, we'll leave it at that. Lord Fubar, I bought Manulife at $18. Yay, I'm retired. Nice. Amrit, I'm curious to see the performance comparison between 6 and Bank. I was waiting to get into 6 thinking price might drop from initial hype. That'll be that'll probably be a future video once we've got enough history. Like I would want at least a year, I think, of data for 6 before I would pull up a full comparison, but it will be very interesting to see for sure. All right, Henry Hudson discovered James Bay. I was just commenting on the MSTE. Okay. The Palantir has won. The Palantir one has had Palantir go up so much that the yield is lower than when it came out. Currently 25.8 yield versus Harvest Tesla 35.7. Palantir and Nvidia seem stuck lately in price. Okay. All right. Andrew says, hey, Candace, what are your thoughts on DBO? All right. Well, let's pull up DBO. DBO, here we go. All right. So DBO, let's see here. I'm going to assume that you're not talking about the penny stock. I'm thinking we're looking at Invesco DB Oil Fund. All right. I like the word oil. I have not looked at this one before, Andrew, so I'm coming in pretty blank here. Pretty blank here. All right, so let's take a look here. All right, they're a little bit on the downside, but the whole oil market has had a pretty rough year and a half. So what do we got going here? We don't have anything in the lines here. All right, I'm going to take a look at the back end quickly, see if I got any information here. All right, I got very little. You know what? This is a Yahoo Finance one. We're going to go into DBO here because I am not getting anything on TMX. And sometimes TMX can do that with US companies. All right, here we go. Invesco Oil Fund. Let's pull it up and let's see if I got anything at all here. All right, now, it might be because it's a fund. It might be because it's a fund, but let's see here. I got a P. I got a yield. All right, you got a 5% yield on it. That's definitely interesting here, but yeah, I don't have a lot of other stuff in here. I do not have a lot of other stuff in here. It's because it's a fund. So what do I think of it? I don't know. I honestly don't know. Andrew, this is one I would have to do some research on just because right now I just don't have the data. I don't have the data to, other than I know it has fallen in price over the last year. That's about all I can tell you at this point in time. So I don't know. This is one I do not have any opinion at all on. All right, Shawpaw. Let's see. In my opinion, the Questrade Self ETF just means I select a basket of stocks and add them. Percentage of basket, and when I invest, say, $100, it auto distributes to the stocks depending on the allocation. Yeah, exactly. I mean, I can see some usages for it, but at the same time, like I said, I think there's problems. I think there's also, I think for the right person, it could very well work well. I don't think I'm the right person personally, but it feels really cool to build your own ETF. But I think once people do it and they kind of realize some of the limitations of what this software is going to do, there may be some pushback. There may be some people saying, okay, yeah, it's neat, but it's a lot more work than I thought. Or it's just not working the way I want it to work. Andrew says the QT ETF sounds like a great investment for someone who is great with macros. Maybe. Depends on. Imagine if you could actually use a programming language with it, so you could really create some interesting, I was thinking like a Visual Basic type interface or something, but oh boy. Paul, with Snowball Analytics, you can compare your account performance to other indexes over the last 6 months. I am outgoing S&P 500 10.5%, but over the last 6 months, underperforming ARK ETF by 16.3%. Uh-oh. Oh, Andrew meant the penny stock. All right, let's go back. DBO. All right, it's the penny stock. What can I say? Well, it is up 12% today, so there is that. Look at that. I mean, yeah, it's moved up a lot. It's moved up from about 60 cents to 75 cents over the last 5 days. And if we look at the last year, this stock here has moved from, oh boy, there we go, from about 13 cents to 74. So it's moving up. It's definitely moving up. All right, first of all right, D-Box Technologies. So something in tech. Let's see if we can see exactly what they do. All right, they redefine and create realistic, immersive, and haptic entertainment experiences by providing whole body feedback and stimulating imagination through movement. Okay, so haptics. It's doing haptics. You know, if you've ever had like that, like a controller that vibrates, it's kind of a very simple form of haptic. But yeah, it's like okay, that's kind of cool. I think that's cool. I think there's a future in that. I think, especially as we start moving into more and more virtual stuff, I think there's a lot of opportunity for that. Now, I don't think, yeah, no dividend. I was expecting no dividend. Let's take a quick look at the back end on this one. I'm not normally a big fan of penny stocks, and I got nothing. I got nothing on this one at all. But I do know that they're profitable. We've at least got a positive EPS. It's not a lot. They're making a little bit, but I like what they're doing. I like the space that they're in. I would need more information on this. You know, I would need to have at least a little idea. So looking at this here, this DE ratio, to me that indicates it may not have any debt. Now I wonder, let's actually, you know what? Let's go to Yahoo Finance again just to see if this is a TMX just doesn't have the information here as much as Yahoo. Sometimes Yahoo surprises me, but yeah, let's take a quick gander down here and see. We do. This is what I needed, Andrew. So return on equity, look at this. 47.21%, that's crazy good. 22.82 return on assets. I'm loving both of them. They got a healthy profit margin, 17.10%. Their debt to equity, 18.06%. So it's not that bad. So yes, I think I like this company. It's a penny stock though, so it is extra risky because, you know, a lot of times these smaller cap companies can get into trouble easier when market conditions aren't great. But so far, this company has been doing really well. And I mean, look, let's go back. We looked at the 1 year. Let's go to the 3 year. So yeah, they they were flat for a long time in here, but it looks like they're really starting to pick up a little bit here. I still, being a penny stock, I probably still wouldn't go very deep into it. I would kind of play with it with play money, but I think it's very worthy of that for sure. All right, Paul. Let's see. I keep looking at ARK at ARK ETF for many months now, but have not pulled the trigger to buy. I think some of it is Cathie Wood has such a negative. There's a lot of negative that surrounds her. A lot of people are very anti Cathie Wood, so that can almost make you not want to jump in. But you know, yeah, some of her funds will do well. I mean, you know, she is, believe it or not, she's right sometimes. The only thing I would say about Cathie Wood is that I am skeptical of her valuations. And a lot of times I think, and I'm thinking, okay, she's evaluating, she's saying Bitcoin's going to be worth this much by this point in time. It never is worth as much as she says, but sometimes I wonder if she really believes that, or if she's saying that to try to stir up more interest in her funds. So there's that aspect as well, and I kind of believe it's the latter, because she is a smart woman. I just think that I think that in the sake of sales, she tends to push evaluations further than she probably knows she should. Anchor Tours. If you're wanting to invest in energy, natural gas seems to be the going concern at the moment. Yeah, they're doing well. Shawpaw, what's your opinion on Dollarama earnings coming up next week? Holding since $50 range. It was my COVID buy. All right. Well, I love Dollarama. And let's just quickly pull up Dollarama here. All right. Dollarama. So yeah, and they broke 200. So that's not bad. I don't know how much you've got in there, Shawpaw, but you've made a bit of a profit. That's for sure. And and heck, let's go to the 5-year. The reason I've gone to the 5-year is this here is actually, we have to go to the 10-year now to see that. I'm feeling old because we have to go to the 10-year to see the pandemic. It's like, wasn't that just yesterday? Um, and yeah, so where's the pandemic? Right in here, this little bunch in here. This one here, this is the housing crisis. Housing crisis, pandemic, Donald Trump. 3 disasters. What can I say? Sorry, Donald. But yeah, no, they have been doing really, really well, and they're poised to continue doing well. You got to look at it this way. As long as these tariffs are a threat, people are going to be gravitating to places like Dollarama where they can get things cheap. And it's just simple things. It's like, do you want to go to a regular store to buy a new plunger for $5 when you can probably get one that'll work from Dollarama for $2? And that's where they're making a lot of their money. I'm not saying plunger sales, but that was just an example. But I guess you can say they're flushing out the market because they're really pulling a lot in for sure. And they're doing really, really well. They have a very good business model. Now, they bought, what was it, the Reject Store? I think that was what it's called in Australia. They bought that chain, and that chain was struggling. But they're bringing in the Dollarama formula to turn it around, and they will. I think they'll do really, really well with it. So yeah, they keep expanding, and this is the beautiful thing: is yes, they're expanding in Canada as well, but they're expanding internationally. They're becoming a pretty big international presence. I think there's still lots of room for them to grow. What I'd actually like to see now that they're up at 200. I think it's time for a stock split. That's what I think, but I don't know if the board thinks that, but I think it. So yes, I do like it. And look at this. This is here. Most of this here is going to be that report. So yeah, I think they're going to do fine. I think they'll do fine. I think they'll at least meet or exceed expectations. Rory says, I'm getting closer to my natural gas inverse buy with HND for a long-term swing. Oh, interesting. Paul says, this is the reason I never bought ARK-K, outperformed ARK-K ETF on 7-month, 1-day, 3-month. All right. Anchor Tour says, if you make your own ETF with Questrade, can buy comparing the past performance of it to other established ETFs. Well, I'm sure you could. Now, whether or not... I don't know if Questrade will do it for you. You might have to manually do it, but I think that would be fantastic. At least that would be neat. You could sort of see how you're doing. It's almost like you could put on your resume. You could put, I was a fund manager. A fund manager. Andrew says DBO seems to be doing decent. CEO just bought a ton, and their news report yesterday shows they bought on an executive who worked for Disney, Sony, Sega, and Apple. That's a very strategic move because look at, these are companies that would actually be interested in the technology that DBO is doing. So that's a very interesting move. I like it. I think it's a good move, actually. Anchor Tour says, if you make your own ETF with Questrade, can you compare it to the past performance of other established ETFs? I think I just answered that. You can, but you'll probably have to do it manually, unless Questrade, unless they bring that functionality. I don't know if they will or not. D-Box. Yes, I've actually been in one. They're in the movie theaters. They are chairs that move and vibrate while watching the movie. Yeah, and depending on the one I saw Rogue One. I saw Rogue One in one of the D-Box cinemas. It was, I think it was in Vancouver. It was in Vancouver. That was quite the ride. I mean, the chair was moving, and anytime somebody fired blasters in the movie, there'd be like jets of air that would zip by the side of my head. Like, we're talking pretty fast, like it would move my hair and everything. That was quite the ride, but I will say, I was a little sore by the end of the movie. From all of the moving and everything. It was like, you know how you're sore after you do a bunch of exercise? It's kind of felt a little bit like that. But it was pretty fun. It was pretty fun. Andrew says, yep, that's why they were flat for so long during the pandemic. Actually, you know what? You know what? Just going back to Finbar one more time. I also want to say that I found it was a little distracting too. All of the moving, the smells. There was even, I think, at one point, like when the stormtroopers were going through the water, that there was sprayed mist coming up in the air. I thought it was a little distracting. I would almost say, if you want to really enjoy a D-Box with a movie, I would say watch the movie first. So that way there, you come in on your second viewing with a D-Box, then you can experience all of that extra stuff. And that way there, you already know the movie, so you don't have to, you can just enjoy all of what D-Box has to offer. That's what I would say. Because that was the one complaint I think I had, is that sometimes the stuff the D-Box was doing was distracting me from what was happening on the screen a little bit. Maybe I'm just weird like that, but that was the experience that I had. All right. Lord Fubar says Dollarama has 10 years of growth ahead of it. They are now in Mexico and Australia. Yeah, exactly. And they're not going to stop, guys. They're going to continue expanding. Roku says, if anyone is considering moving into a retirement home, I strongly suggest looking at some of the Chartwell offerings. Yeah, absolutely. And speaking of retirement homes, let's take a look at Extendicare for a second. They had another big day, up another 5%. So they have been, I'm going to pull this 1 year, they've been on this tear. So we had this big jump here. I honestly thought they were going to correct a little bit after it, and maybe they did. It was a tiny little correction in here, and they're off again, off to the races once again. So here's a company like, little over $10 a year ago, now worth $22. They've been doing really, really well. All right. Andrew says, which big caps would you consider at the moment for a very long-term RESP hold? The big caps. I would consider, if I'm thinking of dividend growth, and obviously that's what we're sort of thinking if it's a long-term hold, I would kind of go back to my original answer. If I could only hold a couple of stocks within a thing. Now, and let's just say, when we're talking big caps, I probably would go with one of the banks. And in a way, the one bank I think has the most room to grow is probably National Bank. So I could even conceive, if I was thinking of a long-term hold, I could go with National Bank. Because as you know, National Bank is looking to continue to expand. They've been doing pretty darn good. Now, the other banks, yes, some of them are making stronger footprints in take CIBC. CIBC is getting a stronger U.S. footprint. So yeah, there is that as well. But I would say at least one bank within the energy sector, I would take a look. And I really like Torlamine. They're just a really good company. So that might be an option. I think another strong company as well is, if you go into utilities, would be something like Fortis. You could even argue Enbridge. I don't like the debt on Enbridge, but you could argue Enbridge as well. I would also say the railroads are really safe. They're really safe. We may make fun of the fact that CN has been, has been having a rough year, but when you start to look on the long run, it's a different story. So let's just take a look. For example, CNR, we'll pull them up here. So yeah, they have, when you look, so if you look at CNR over the last year, nothing too impressive. Even the last 3 years, not really that impressive, but let's really back out. Let's really back out. That is painting a completely different story. And I think that's the power of something like CN. Rail is the cheapest way to move goods, and with all of the pressure on and developing more and more resources in the north, right now CN has a monopoly on that transport there. CP doesn't. CN has all the tracks up to the mines up north. So yeah, I think they're going to be huge. So that's one of the things. Like I honestly right now, CN in the 0 to 100K challenge, for example, CN's been last place now for they've been pulling the worst stock in my portfolio for how long? Well, for a while now, at least 3-4 months in a row. But I'm not worried, and I don't care, because I know in the long term they're going to be fine. By the time the challenge hits its goals, CN will be respectable. They will be respectable for sure. All right, Lord Fubar has to go and clean snow. I would not be out cleaning snow here. Right today, and this was just the last time I looked, the wind chill was -20. And something tells me it's colder now. Guys, I want to check. I kind of want to check. Let's just do it. Let's check. Let's take a look and see what the wind chill is. Holy banana bread, it's a -25. So not a day to go out. We got the full Arctic polar vortex here. Oh boy. Why dividend growth for RESP? Okay. Your goal in an RESP, if you have a long period of time, like if you've got a long runway in that, it's not that you want to go with dividend growth. It's really, honestly, your best bet is total return, right? Total return is the king. So a lot of the dividend growth do tend to have really big total returns. And they're also really, really, they're blue chip, they're stable. You don't have to worry about them. But yeah, you could argue, sure, you could argue that there are funds out there. Like there are even some covered call funds that have really good total returns. But I would be looking at a longer term, right? If you I look when I look at these stocks, a lot of times I'll look at what they did in the last year, what they did in the last 3 years. Well, if you're looking for something that's going a really long way, you might want to change that. You might want to look at what did it do in the last 10 years? Especially if you're looking 10 years ahead, why wouldn't you look 10 years back? It makes sense to sort of get a better feel for where it's going. But yeah, in a case like this, and this is also, you really want your safer stocks when it comes to, it's your kids, right? It's your kids' education. The last thing you want to do is be putting yield max in there. Oh boy. Then it will be like, well, you can't go to college, son, but I hear Subway has a sandwich class. You don't want that. You really don't want that. You definitely want to go as risk-free as you can, while still at the same time trying to find some really good total returns that are blue chip, for example. Now you could put in something like bank. I think bank is fine, but it is a little more risky, and I would still want to watch it for that reason. But it probably would be absolutely fine. We don't have that 10-year history, though. That's the one thing that we don't have. So yeah, that's kind of the thing. For me, it's just, treat it like when you first start investing. Your goal is just to get as much money as possible. Not so much in the form of income, but in the form of total return. So that's your big goal. And here's the big thing about an RESP too, is you can manage it, right? It's not like you have to put everything in it and set and forget it. You can manage it along the way. So if you do have some funds that have big total returns, but perhaps they're not as safe as you'd like them to be, well, you can always monitor them, and if things change, you could always, you could cash out of those and move them into something safer at that point. So yeah, that is an option. All right, Cowboy says, greetings, all the power is back. Oh, good. Oh, that's fantastic. Yeah. I know you had mentioned that yesterday. So hopefully your power's back at least for the day. Is the Wealthsimple ETF similar to the Quest trade? That we don't know. We don't know if, well, I mean, Wealthsimple right now doesn't have a make it yourself. At least as far as I know, I haven't heard of one. So we'll have to see. And I still don't fully understand what Quest Trades is going to look like. So I need to see some documentation on that as well. CN is the caboose. Yes, CN currently is the caboose of the portfolio. Doorpat says, why dividend growth in RESP? I was thinking maximize pure growth to get to critical mass for school fees. Personally, stocks like Shopify, Pure Tech, NASDAQ stocks, that may be safer stocks 3 years before. Well, and that's, see, this is the whole thing though, right? The larger the total return, that is, a total return, like if you have, so maybe you have, let's say you put in a stock like NASDAQ, like NVIDIA. If you had the foresight to see that was going to go up 200% or 400% over that amount of time, that's a no-brainer. But you don't usually have that foresight. So kind of you're at that point where you have to sort of look at what you have and what you can expect total return-wise to make the best bets. But you'll occasionally something might come along and you see it and you're like, oh my God, this thing is going to 4x, 5x, 6x. Sure, open a position in that within it. That would be fine, but don't gamble, because for all the ones that pay off, there's going to be ones that don't. And you don't want to, you don't want to sit on a dud. Even if, let's say you don't lose money on the dud, but you don't really make any money, and you sit on that the whole time, well, that's a lot of lost revenue. Whereas at least with some of the total return stocks, you kind of got a general idea of what you're going to get. And, sometimes you can bank on that a little bit better. All right, Cowboy, most schools have a fries with that diploma, like water management for farms. Oh boy. That I don't know. All right, guys, we're at about an hour and 11 minutes. If you got your last minute questions, get them on in. Doesn't mean we're leaving right away. Just means that get the questions in. So long as you guys keep throwing them at me, I'm here. So that's always the good thing. I'm going to have some coffee while you guys do that. Oh God, that is so good. I am enjoying that. That's for sure. All right. We'll get the weather out of there. We'll get the weather out of there for sure. We did not actually take, one thing we didn't look at yet, guys, and let's just take a quick gander at that, is we know the bank succeeded in every way, shape, or form, but I'm kind of curious to see by how much. So this is TD. We'll just start quickly with them. They beat EPS by 8.22%, revenue by 3.61%. Oh, that 8.22, that's pretty good. Considering TD has, they've been kind of recouping their reputation after all of that money laundering stuff. So that's not bad. Not bad at all. All right, CIBC. Look at this. Oh, these are pretty good numbers. These are solid numbers. EPS by 5.52%. Their revenue by 4.27. I still like TD's a little better. I still like theirs a little better. All right. We'll take a look at these two here in a second as well. Just give me one moment. Let's go to BMO quickly. Let's see, BMO. Oh, this is another good one. They beat their EPS by 8.03 and their revenue by 3.40. So that's not too shabby. And was there one other one we missed? Well, maybe we did. I don't know. Let's go to EQ Bank. This is kind of funny because we're looking at they had their earnings as well. So EQ Bank, they missed. They beat on revenue, but they actually missed on their EPS by 23.37%. And they beat on earnings only by 0.16. So guys, let me just tell you, this going up would have been in the opposite direction if they had not had that positive news. So if you think about it, if their earnings had been half decent today, this spike it could have been potentially bigger. It could have been bigger. So that's kind of cool. But they have missed. We'll have to see how this is all going to translate. And we'll also need to see the timeline, because I don't know when this deal closes, if there's any regulatory hoops that they have to jump through. Then Laurentian Bank. And of course, Laurentian Bank, oh boy. Up here. They're up here. Look up. Look way up. Of course, Laurentian Bank is, they're splitting into two. So most of their core business is going to another French bank, and National Bank is taking their retail footprint. So, and I can't remember the name of that other bank off the top of my head. It was a bank I'd never heard of before yesterday. But yeah, National Bank is peeling off the retail part, and that's going to help improve their retail presence, which is good news for them. But yeah, pretty good. Now they should also, Laurentian Bank should have earnings coming out soon. Maybe they're the Friday. Maybe they're the Friday. We'll see. But yeah, they've done really well since, well, this year was, early this week when it was announced that they were splitting. So what can we say? All right, Paul. It says news. DHL has officially taken delivery of its first all-electric Tesla. The Tesla. Semi exceeded expectations in DHL's 2-week, 3,000-mile trial. Okay. Interesting. So DHL, of course, they are a delivery. They run a bunch of delivery trucks. So you guys probably have all heard of DHL because they probably delivered a bunch of your Amazon stuff to you. But that's kind of positive news. Absolutely. Might explain partially why Tesla's been doing so good the last couple of days. What oily or gas companies do you like? Oil, I really like Torlamine. So one of the reasons I like Torlamine is, well, obviously the special dividends that they gave out back in the, actually it wasn't that long ago, it was a few years ago. Those were really great. So when oil industry is really pumping, that's kind of a pun, I guess. But when it's doing really well, they're a company that does give back to their investors, and I really respect that. As an investor who likes getting given back to, that to me is fantastic. So yeah, that's kind of why Torlamine is up there at the top. There's a whole bunch of others in there that I like as well, but Torlamine I think is the big one. Tim says, have taken my MSTE out of drip. Will start to move these distributions into Biggie. No matter how many donuts I eat, I still don't have the stomach to drip MSTE long term. Okay, fair enough. Fair enough. Let's see, Biggie dividend tomorrow. Nice. That's always, you get to say that twice a month though, cowboy. RY and CM are the big ones today. Yeah, absolutely. Absolutely. CNQ is doing good. Yeah, I mean, both Canadian National Resources, also, and Synovus, yeah, they're both really good as well. If it wasn't Torlamine, if that wasn't my answer, probably would be CNQ, to be honest. I do really like them a lot. So, yeah, what can I say? What can I say? All right. Whew. Guys, tomorrow, next update for the 0 to 100K challenge is going to be on live at 2 p.m., of course. And I will also point out, I'm also going to point out here that it's all about volatility, because we're going to talk a little bit about November. And gosh darn it, that was a volatile month. It didn't, although it did kind of go by fast. It kind of felt like a week, to be honest. It was a fast month for sure. Scratch says, I prefer Torlamine to Torlamine. Okay. Yeah, if I had to choose between Torlamine and Torlamine, I would choose Torlamine. Yeah, for sure. 100% I agree. All right, Tim says, I have a question. Is hard for everyone else to get other people in investing? I've tried with family, friends, co-workers. It seems almost impossible. Yeah, it can be. And one of the problems, especially with family, is that they're family, to be honest. I know my mom, anytime I've tried to talk to her about investing stuff, she's just like, she just changes the subject. She changes the subject. It's like, I'm like, do you know that this is what I do for a living? And she's just like, no, I'm gonna ask, I'll ask somebody else. And it's because it's personal, right? And I understand, like, for example, if you were to go to a family member and say, so let's say last year you went to a family member and said, you know what, you should invest in that MSTE. It's going to explode with Bitcoin. And sure, it starts off in the good direction, but at this point in time, that family member, they're not inviting you to Thanksgiving or to Christmas. You're not even getting a gift. You're on their naughty list. So that, I think, is one of those things. It's kind of like that. If you know them too well, it's hard. It's really hard to, to help out even friends, because when things go wrong in the market, and things go wrong in the market, whereas you take me sitting here, if I'm talking about a stock and it it decides to go digging into the dirt and digging itself into a giant hole, you guys can, of course you can say, oh, that Candace once said it was a good stock. And that's fine. That's fine. I don't mind. I'll take that abuse. I'll take that abuse. But if I was your, if I was like your family member or something, that'd be a lot more awkward. That'd be a lot more awkward for sure. So I think that's part of it. I think that's part of it, Tim. Cowboy can be a blame game. Hero to zero in mock. Yeah, exactly. It's like, and that's the thing. It can be a situation like quite literally with YouTube. I could be talking about Hammond Manufacturing and they could be doing great. I'm like a sage and people are like, oh my God, I can't believe it. And then I may have one stinker I bring up. And, there's some people that are just like, oh, I can't believe you even thought that. You've lost all my respect. Unsub. Goodbye. That happens. That's a thing that will happen. It's just a normal thing. But I would rather that happen to me than to one of your family members. So let me just, I'll take the hit. Well, I'll take the hit. Your loved ones don't have to. Doorpat says, I've given up trying to convince people who don't want to. My sister finally opened her RRSP at work after months of my preaching because I stopped reminding her and she saw I stayed consistent. Okay, fair enough. And one of the things that you can do is, if you can always, like, if you find, I don't want to, I'm trying not to promote myself on this one, but if you find a video on YouTube that is very useful, you could always say, oh my God, I was watching this finance person and I loved what they were saying here. And then maybe they'll look at it. Maybe they will, but maybe they won't. But at least if you sort of let them know that information is there, they can make up their own decision if they want to take a look at it. It doesn't have to be a YouTuber. It can be a book. It can be, it can be anything. Just make sure it's not Jim Cramer, because then you're gonna have a bad relationship with them after that. Poor Jim. Paul, 4.46% higher for Tesla to go to fill my limit orders in my TFSA to pay off half my debt. Tesla all over the place in price, so you have to put the limit orders in for GTC. Good till canceled. Yeah, fair enough. Yeah, I love swinging on Tesla just because I know that up today, down tomorrow, up the next day, down the next. It's so consistent. It's so consistent. Brian says many people think they can just copy someone else's portfolio, but a lot of times the price point is no longer valid to buy anymore. That's true. So yeah, like you look, for example, if you look at the HBTE, yeah, I'm holding it in the challenge, and it's up quite a bit. If you go out tomorrow and buy it, you're not up. I'm up about 40%. You're technically at 0%. And if it retraces a little bit, I'm still up like 35%. You're down 5%. So, yeah, absolutely. It's never, I don't think it's good to copy, but what I will say is it doesn't hurt to look at someone's portfolio and then sort of reason out, okay, why are they doing that? Does that make sense to me? And if it does, well, sure. That means do some research. Do more research. You don't want to just blindly, just sort of say, okay, here we go. Here's my checklist. Need it, need it, need it, need it. No, make sure it makes sense for you, because the way I invest may be completely different than the way you invest. And keep in mind, with the 0 to 100K challenge, sometimes I will make some investments in there that are there for the simple reason to teach. For example, if you guys remember, there was that for a little while, I was running a covered call tech with its non-covered call version. So both of them were basically the same, except for one I covered calls. I ran those together for a bit because I just wanted to sort of demonstrate the whole idea of loss of upside potential. So yeah, I wouldn't normally do that. Like I'm not going to normally do experiments, but I will in the 0 to 100K challenge. I'll, if there's a lesson to be learned, I'll do it for sure. Um, and if you guys remember the Gary Gill situation with MSTE, and uh, apparently losing $100,000 is going to be a teachable moment in that portfolio. But hey, I probably wouldn't go that far. I probably wouldn't go that far. I'm not made of that kind of money. That's for sure. Door pat. For now, I will focus on leading by example and hope I don't flub up on my journey while they watch. There we go. Yeah, and if you do, let them see it. That's the way I look at it. If I make a big error, I'm of that opinion that you don't sweep it under the rug. You take ownership to it. Like you can tell somebody, look, here's a mistake I made, and then this is the journey it put me on to fix it. And this is the lesson I learned from it. And then maybe they'll grab that nugget of a lesson that you learned and not make that same mistake. Or in many cases, they might just make the same mistake thinking, oh, well, I'm smarter. I'm not going to make the same mistake. And then, I just made the same mistake. It happens. Cowboy, my sister sold her home and put it in a RRSP. Now it's a taxable thing. Yikes. That's, yeah. Well, it is taxable, yes. But, and I don't know how old your sister is, but she has a lot of taxes she can excuse and not pay taxes over the next little while. So at first, my first reaction is yikes. But if your sister is younger, she's got a lot of work ahead of her, and she makes a lot of money, well, she can write off all of the higher end money year after year after year, because that will keep carrying forward. She can keep writing it off until she's reached the value of the house. And then if she pulls that money from the house out after she retires, it would technically be at a lower interest rate than the interest she would have paid on the money she made. Not from the house, but on the money she made from working. So that technically would work. But boy, that's a big way to do it. That's for sure. Brian says, ouch, that's not the best choice. Except for with my scenario. My scenario does work, but she's got to be making enough money to make it worthwhile. If she's not, if she's just making regular money, not sort of high end, it may not work, especially if she doesn't have a lot of years in front of her before retirement. Tim Smith, I put together an intro to investing email I sent out with a few key videos and links to books I find helpful. Mountain Finance has included a good resource to check out for Canadian investors. Well, thank you for adding me to your book. Hopefully people will come along. Let's see. Cowboy, listen to fools and see what happens. Cannot swing Tesla in the TFSA. That is true. That is true. Kelly. Could she switch it out of the RRSP without profit before she uses the tax credits? Here's the funny thing. She could technically, if she wanted to pull some of it out of let's say she wanted to pull $5,000 out, and she still has all of the credit for doing it, she could still use 5,000 of that credit to sort of cancel it out. I mean, you will cancel it out. The only problem is if you don't use it, right? And even then, yeah, you could still use it. I mean, you could still use it. It's just, oh boy, it's just a lot messier it's really messy. That's the reason I think I cringe, is that it's messy. Let's see. Doorpat says, "Oh, trust me, I've done the videos and audiobooks. They said they don't have time to watch or listen to those. My unsecured line of credit, X2X. Different banks are 5.65, but they gave my wife one at 1. Ooh, at 1p. Interesting. 10.22%. Glad Gigi is teaching with his money, not mine." Agreed. That selling house and putting into RRSP sounds like possible over contribution and possible fines. Well, that's the other thing too. And I didn't even go there to that point. Yeah, I mean, you have a limit to how much you can put into your RRSP, and if that house is bigger than the limit, then you're dealing with over contribution, and yeah, that would be another. Like I said, it's messy. It is messy. Paul, I guess I have to get my wife to phone the bank to lower the line of credit rate from 10.22 to something lower. Yeah, maybe for sure. All right, guys, there we go. We hit the hour and a half. We're going to be back here again tomorrow. So this is fantastic. So this week, in case, I didn't even mention it once today, we're doing this thing this holiday season called the Financial Express. So there's an opportunity to add basically market closes every market close. Tomorrow there will be an opportunity to add a market close to Monday. So we'll do that tomorrow. I can't wait. It should be pretty darn good. And just quickly, Isaac's coming in. She should contact H&R Block to see if they can help. She may have to withdraw the over contribution. Yeah, if she went in that far, hopefully, cowboy, hopefully hopefully she didn't. Hopefully whoever helped her with it at least stopped her at the limit. Hopefully, but we'll see. Idiot proof something and they send better idiots. Oh yes. I don't want to. I kind of hate using the word idiot though, but you know, it's like just people who haven't learned better. That's a better word maybe. And Doorpat says, "Thanks, Candace. You're welcome." All right, guys. We'll be back here again tomorrow. We'll do this all over again. We'll see what the market's going to do. I don't know. And of course, that video is dropping tomorrow, so we will see you then. Until then. And I don't have my normal outro because I totally forgot to add them. So have a fantastic night. We'll see you tomorrow. Bye-bye.